You've worked for decades, paid into the system every single paycheck, trusted that when your working years were over, the system you supported would be there for you. And now, suddenly, there's a number being whispered everywhere you look. $2,100. A potential payment tied to 2026 that has millions of Americans stopping mid-scroll, leaning closer to their screens, and asking the same question in different ways. Is this real? Is this actually coming? And more importantly, am I one of the people who will get it? Or am I about to be quietly excluded without even realizing it? Because here's the uncomfortable truth that isn't being said loudly enough. Not everyone who thinks they qualify will. And the difference between seeing that money hit your account and getting absolutely nothing could come down to details most people never think to check until it's too late. Right now, confusion is everywhere. People are hearing the number, but they're not hearing the fine print. Some believe it's a stimulus check. Others think it's an automatic Social Security bonus. Some are convinced it's a rumor designed to get clicks, and many are doing what people always do when information is unclear. They're assuming it will all just work itself out. But history has shown us again and again that assumptions are where people get burned, especially when it comes to government benefits, especially when it comes to money tied to eligibility rules, income thresholds, and timing that doesn't get explained clearly in headlines. So let's slow this down and talk honestly about what's actually being discussed, why it exists in the first place, and why paying attention right now could make a real difference to your financial future over the next few years. Because this isn't about hype. It's about understanding what's on the table, what's not guaranteed, and what steps you should be taking while everyone else is still arguing online about whether it's even real. The first thing we have to address is the skepticism, and that skepticism is completely understandable. Over the past few years, people have been whiplashed by headlines promising relief, checks, boosts, and benefits that never quite materialized the way they were described. We've seen proposals die quietly in committee. We've seen numbers floated that were never backed by real legislation. We've seen viral posts that turned out to be half-truths at best. So when someone hears about a $2,100 payment connected to Social Security in 2026, the instinctive reaction is to roll your eyes and say, "Here we go again." But this time, there is something different happening beneath the surface. This isn't just social media noise. There are actual discussions taking place in Washington. There are policy proposals being drafted, debated, revised, and argued over. And while nothing is guaranteed, this idea didn't appear out of thin air. It's tied directly to growing concerns about Social Security's long-term stability, the effectiveness of cost of living adjustments, and the undeniable financial pressure being placed on retirees, disabled individuals, and low-income seniors as we move deeper into 2026. To understand why this payment is even being discussed, you have to understand what lawmakers are seeing when they look at the data. Inflation may not dominate headlines the way it once did, but for people living on fixed incomes, the damage has already been done. Grocery bills are higher than they were just a few years ago. Prescription drug costs continue to climb. Utilities, insurance premiums, rent, property taxes, and basic services have all moved in one direction, and it's not down. Meanwhile, Social Security cost of living adjustments, while helpful, are based on formulas that many argue do not accurately reflect the real expenses seniors face every day. For someone still working full-time, rising costs can sometimes be offset by higher wages or additional hours. For someone living on Social Security, SSI, or SSDI, there is no such flexibility. Your income is largely fixed. When expenses rise faster than benefits, the gap doesn't just show up on paper. It shows up in skipped prescriptions, delayed doctor visits, reduced grocery trips, and hard choices that no one who worked their entire life expected to face. This is the context in which the $2,100 figure emerged. It wasn't pulled out of a hat. It's based on analyses that look at the growing gap between what beneficiaries receive and what they need to maintain a basic standard of living. When you break it down, that number works out to roughly $170 per month over a year, enough to help with food, utilities, medications, and other essentials, but not so large that it fundamentally restructures the Social Security system. In other words, it's being framed as targeted relief, not a permanent overhaul. But here's where people need to be very careful. This is not being designed like the pandemic-era stimulus checks. Those checks were intentionally broad. If you fell under certain income thresholds, you were in. This proposal is different, much more targeted, much more specific, and much easier to miss out on if you don't understand how eligibility is being defined. At the center of the eligibility discussion is your connection to Social Security. Most versions of the proposal focus on individuals who are currently receiving Social Security retirement benefits, Social Security disability insurance, or supplemental security income. If you're not receiving one of these benefits, you're likely not in the primary group being targeted. That's the first filter. And for many people, that's where the assumptions start. They think, I'm on Social Security, so I'm covered. But that's only the first step. The next major factor is income. And this is where things get complicated quickly. The income thresholds being discussed are roughly $75,000 for single filers and $150,000 for married couples filing jointly. On the surface, that sounds high, especially for people who rely primarily on Social Security. But here's the catch that trips people up every single time. These thresholds are based on adjusted gross income, not just your Social Security benefit amount. Adjusted gross income includes far more than many people realize. It includes pension income. It includes withdrawals from retirement accounts. It includes investment income, dividends, interest, rental income, and wages from part-time work. It includes everything. So while your Social Security check alone might be modest, your total income could be higher than you think once everything is added together. And if that total crosses the threshold, even slightly, it could mean a reduced payment or no payment at all. This is why people who feel like they should qualify sometimes don't. And it's also why some people who aren't expecting anything could end up receiving the full amount. It all comes down to the numbers on your tax return, not your perception of your financial situation. Another layer that's being discussed, and one that has generated a lot of quiet debate, is the timing of when you claimed your Social Security benefits. Some versions of the proposal include provisions that favor individuals who delayed claiming benefits past their full retirement age. The reasoning is that people who delayed often did so out of necessity, continuing to work longer because they couldn't afford to retire earlier. In that sense, the policy is attempting to recognize that delayed claiming may reflect prolonged financial strain rather than comfort. On the flip side, there are discussions about whether individuals who claimed benefits early might receive a reduced amount. This is not about punishment, but about targeting relief in a way that lawmakers believe reflects need and sacrifice. Of course, these are just proposals, and nothing is final. But understanding that these discussions are happening is important because it means eligibility may not be as simple as checking a single box. Married couples face another set of questions. If both spouses are receiving Social Security benefits, does each person receive $2,100 or is it $2,100 per household? Based on current language in most drafts, it appears that the payment would be per eligible individual, not per household. That means a married couple where both spouses qualify could potentially receive a combined $4,200. However, and this is critical, that only applies if the household's combined income stays below the joint filing threshold. If the combined income exceeds that limit, the payment could be reduced or eliminated entirely, even if each spouse would have qualified individually. This is where planning and awareness matter, because small changes in income, timing of withdrawals, or filing decisions can sometimes push a household just over a threshold without realizing it. Another major point of confusion online is the relationship between this potential payment and the annual Social Security cost of living adjustment. These are two separate things. The COLA is an automatic adjustment that happens every year based on specific inflation metrics. It increases your monthly benefit going forward. This proposed $2,100 payment would be separate. It would not replace the COLA. It would not reduce your regular benefit. It would be an additional payment on top of whatever COLA increase you receive. That distinction matters, especially for people trying to budget for the coming years. Then there's the question everyone eventually asks: taxes. With pandemic stimulus checks, the money was not taxable because it was structured as an advance on a tax credit. This situation is different. Some proposals classify the payment as a supplemental Social Security benefit. If that's the final structure, it could be subject to the same tax rules as your regular Social Security income. That means if a portion of your Social Security benefits are already taxable due to your overall income, this payment could also be taxable. For those whose income is low enough that their benefits aren't taxed, it's likely this payment wouldn't be taxed either. But until final language is set, this is an area where caution is warranted. Timing is another area where expectations need to be realistic. Even if legislation is approved, implementation takes time. The Social Security Administration would need to verify eligibility for millions of people. Income data would need to be coordinated with the IRS. Payment systems would need to be set up or modified. Based on past rollouts of similar programs, late 2026 would be optimistic, with early 2027 being a real possibility. That's not what anyone wants to hear, but it's better to know now than to plan for money that isn't arriving anytime soon. And then there's the hard truth that needs to be said plainly. This may not happen at all. Political reality matters. Funding matters. Competing priorities matter. There are lawmakers who strongly support additional relief for Social Security recipients and understand the pressures people are under. There are others who are deeply concerned about costs, deficits, and long-term sustainability. The legislative process is unpredictable, and serious discussion does not guarantee passage. So what should you be doing right now while all of this is still being debated? The most important thing is making sure your information with the Social Security Administration is accurate and up to date. Address changes, banking changes, contact information. The smoother your records are, the less likely you are to experience delays or issues if payments do go out. It's also wise to file your taxes, even if you're not strictly required to. Having a recent tax return on file makes income verification easier and reduces the chance of confusion. Free tax preparation services exist specifically for seniors and low-income individuals, and using them can remove a major barrier. And above all, be alert to scams. Anytime money is discussed, scammers follow. The Social Security Administration will not call you asking for personal information. They will not ask for fees. They will not pressure you to act immediately. Anyone who does is not legitimate. The bottom line is this. There is real momentum behind discussions of additional financial relief for Social Security recipients in 2026. The $2,100 figure is not imaginary, but it is not guaranteed. Details matter, eligibility matters, and preparation matters. Stay informed, keep your records updated, protect yourself from scams, and don't make financial decisions based on money that hasn't arrived yet. If it does come, treat it as a bonus, not a promise. And if it doesn't, you'll be glad you planned carefully instead of relying on hope alone.